So, did you hear about what happened over at Yellowstone National Park? Yeah, Yellowstone National Park almost got shut down. Budget analysis finds that the debt deal would actually expand the SNAP and EBT benefits for many Americans. We're going to talk about that in today's video. Ocasio-Cortez, AOC, Alexandria Ocasio-Cortez, she says that she's going to be voting against this debt limit bill. Yeah. And did you guys hear about what they're trying to do to Chick-fil-A, of all places? Chick-fil-A. Now, a majority of global central banks are now expecting gold to grow as the reserve asset while the trust of the US dollar continues to get weaker. This is a concern, folks. And for the very first time in 23 years, the S&P 500 is displaying a very unusual warning for Wall Street. If you guys are new to the channel, my name is Ron. Hope you guys are doing very well today. And again, if you're new to the channel, please consider subscribing to the channel and drop a like for the video. I would totally appreciate that. All right, guys, let's go ahead and jump in. So a woman almost got killed or gored trying to touch a bison in Yellowstone National Park. Now, I don't know if you guys have ever visited a national park like Yellowstone National Park or Yosemite National Park. These parks are absolutely beautiful, and you would actually forget that you're even in the United States. It's just amazing, some of the sights that you can see here. Well, a bison. Can you imagine approaching a bison in Yellowstone National Park? And just to give you a little bit of perspective, bisons can weigh up to 2,000 pounds, and they're capable of throwing grown men in the air like rag dolls. Just to give you a little perspective, these are no small animals. So anyway, so a woman was nearly gored to death as she tried to touch one in Yellowstone National Park. Basically, she tried to extend her hand, and this was actually caught on video. Just wild, right? So anyway, the woman starts running away and falling. She ended up falling over as she tried to get away. But ultimately, she provoked the bison. I can't imagine what was going through her head to want to even attempt to touch this animal. But yeah, so over in Yellowstone National Park, the bison population ranges anywhere from 2,300 to 5,500 animals. So there's a lot of them there. And evidently, they're fairly docile creatures. But, if they feel provoked or, bothered by or agitated by humans, then they can become a little bit aggressive. And here's the thing. Despite the bison's large size, they're able to run much faster than human beings. They're able to run up to 35 miles per hour. So there's no way we're going to outrun them. Most bison attacks occur when people ignore the 25-yard rule and they get too close. So just a heads up to you guys, if you ever visit Yellowstone National Park or any other national park for that matter, don't try to pet the bison. They're not pets. Now, the stock markets have tumbled today as hardline Republicans are threatening this U.S. debt deal. And, there's been, basically there's a deal that was promoted. There was a deal created this past weekend, and ultimately the Republicans have made an offer. But here's the thing. Asian markets, they sank on Wednesday on worries that the Republicans could vote down this crucial bill to hike the U.S. borrowing limit and ultimately risk a catastrophic default that could hammer an already fragile economic recovery. And the worries are that the Federal Reserve might increase interest rates next month, along with further signs that the Chinese recovery is fading. So this was actually seen as very negative news on the stock market. And members of both sides of the political spectrum have raised concerns about the agreement, with Republicans saying it doesn't have enough spending cuts. And of course, the left wing of the Democratic Party is unhappy with President Biden agreeing to any limits at all. So here we have the classic back and forth. Republicans want cuts. Democrats want more spending. What do you guys think? Should we have more cuts? I mean, given the current state of the economy, given what we've seen, coming out of the Federal Reserve, raising interest rates, trying to curb spending, do we really need more spending? Or, should we actually push for more cuts? Let me know what you guys think in the comment section down below. So here's the other thing. The budget and analysis finds that the debt deal would actually expand SNAP and EBT benefits, even though the GOP fought for the work requirements, right? So The debt ceiling bill that House Speaker Kevin McCarthy and President Joe Biden agreed to over the weekend may end up expanding participation in the Nutritional Assistance Benefits Program, also known as SNAP. This is a measure which many GOP members basically were fighting tooth and nail against this thing. They don't want it. And this kind of goes back to, a lot of the free money, so to speak, this pandemic era money, a lot of the SNAP and EBT allocations, which were costing billions of dollars, but they were helping a lot of the lower income Americans. Well, Republicans are trying to pull this thing back, and they're trying to do so in this debt deal. Now, according to a projection by the Nonpartisan Congressional Budget Office, the CBO, the current proposed Fiscal Responsibility Act would expand SNAP and EBT benefits to groups like homeless individuals and veterans. Much love to the homeless individuals and veterans on tough times. In total, at least 78,000 people would gain access to SNAP benefits per month, which is a 0.2% increase. So that's a little bit of this is certainly not what the Republicans want. Now, over the weeks of, fraught negotiations, many GOP members opposed additional public benefit spending, seeking to bolster the work requirements required to access some of these benefits. So you can see the direction that they're trying to go here. But the CBO analysis actually showed an expansion of the pool of potential SNAP beneficiaries. It says here, quote, several groups would newly be exempt from work requirements, people experiencing homelessness, veterans, and people ages 18 to 24 who are in foster care when they turned 18. The bill also raises the age for work requirements from 49 years old to 54 years old. So so there's a lot of items in this bill that the Republicans are not going to want to see. But there's also a lot of items in this bill that the Democrats want to see that are not in this bill. So no one's really getting what they want. Now, based on previous negotiations that I've had as a business owner, as an entrepreneur, generally speaking, some of the best deals are when neither side gets 100% what they want. So we'll see. Now, here's a surprising take. Alexandria Ocasio-Cortez, she's voting against this whole debt limit bill altogether. So basically, AOC, Alexandria Ocasio-Cortez, is planning to vote against this whole debt limit bill tomorrow, or I should say maybe even later today, as the Treasury Department's June 5th deadline for a default fast approaches. Now, the New York lawmaker, one of the highest profile progressives in Congress, had earlier signaled she would oppose the legislation. Quote, she said, my red line has already been passed. That's what she says. She went on to say, where do we start? No clean debt ceiling, work requirements, cuts to programs. I would never, ever vote for that. Okay. So that's where Alexandria Ocasio stands on this one. House Speaker Kevin McCarthy and President Biden announced on Saturday that they had reached a tentative agreement on a debt ceiling deal after weeks of very tough negotiations between both sides. So it's not looking good here. It looks like President Biden and Kevin McCarthy were semi on the same page, but now it's all about getting everybody else on the same page here. Let's just see how much power Kevin McCarthy has over his people. And let's also see how much influence President Biden's going to have over his people, namely AOC. McCarthy released a text over the weekend confirming how well things were going. But, here we are now. So moving on, let's talk about what is going on with Chick-fil-A. Now, Chick-fil-A fries are hands down. I used to be a huge McDonald's fry fan back in the day. But man, let me tell you something. Those Chick-fil-A waffle fries, when they're fresh and just a little bit of salt, oh my God. Like Chick-fil-A arguably, in my opinion, and just if you guys disagree, that's fine. But Chick-fil-A arguably has the best waffle fries hands down. And I would even say that Chick-fil-A's waffle fries beat a lot of the different higher end steakhouse French fries that they offer. Anyway, so I digress. Anyway, so conservatives are now calling for a boycott of Chick-fil-A for going woke. I don't know if you guys heard about this, but Chick-fil-A, basically I think they're probably in all 50 states now. I'm not sure if they're in all 50 states. Anyway, if you don't have a Chick-fil-A in your state, please immediately drive to a state that has a Chick-fil-A. You got to get those fries, and you tell me if I'm lying. Those are the best fries, and they have the best chicken sandwiches. Anyway, so Chick-fil-A, it's a chicken sandwich fast food chain that for over a decade has been sacred. It's been a sacred place for many people due to the rights, it's been a sacred place for many on the right due to its CEO's hatred of LGBTQ plus people is facing criticism for having gone woke. Now, some people are even calling for a boycott. I don't know if I can get down on a boycott for Chick-fil-A. I'll just go ahead and come out right now and say I'm not going to be participating in that if that happens. So he wants the state to ban local governments from refusing Chick-fil-A contracts. Quote, "This is bad, very bad. I don't want to have to boycott." Are we going to have to boycott? And this is according to a conservative strategist by the name of Joey Manarino. Quote, "It's only a matter of time until they start putting blank, blank, blank into the frosted lemonade at this point." Anyway, I'm not going to say what. I'll leave a link to this article if you want to read what he's saying. It's only a matter of time before they put into this lemonade drink. So anyway, that is what is going on with Chick-fil-A. Yeah, he also went and posted a poll asking if people should boycott Chick-fil-A. So the odd thing is that the results are currently split pretty evenly. Would you boycott Chick-fil-A? So Chick-fil-A's corporate purpose is to glorify God. Chick-fil-A's corporate purpose is to glorify God by being a faithful steward of all that is entrusted to us, to have a positive influence on all who come in contact with Chick-fil-A. And this is what the website states. This is on Chick-fil-A's website. Quote, "One of our core values at Chick-fil-A Incorporated is that we are better together. When we combine our unique backgrounds and experiences with a culture of belonging, we can discover new ways to strengthen the quality of care that we deliver to customers, to our communities that we serve, and to the world." End quote. All right. So, this is from Chick-fil-A's website. Like I said, I've never had any negative experiences at Chick-fil-A. And I've been to many of them. And it's wild because when you think about how many franchise locations of Chick-fil-A there are, and to just have a very consistent high level of service, high level of the staff that work there, everybody's always friendly. The services, even if there's really long lines at the drive-thru, you still get through there much faster than expected. And again, the food quality is very consistent. It's hard for me to hate on Chick-fil-A. So, that's a tough one. Now, a majority of global central banks are now expecting gold, the precious metal gold, to grow as a reserve asset while views of the U.S. dollar turn dimmer. Not a good sign for the U.S. dollar here, folks. So, most central banks are now expecting gold to become more valuable. Meanwhile, half of the banks are expecting the U.S. dollar shares of reserves to decline. Another bad sign for the dollar. So basically, according to the World Gold Council survey, 62% of banks are expecting gold to account for a greater share of total reserves over the next 5 years compared with last year's reading of only 46%. Meanwhile, this survey also found that half of respondents expect the dollar to account for 40 to 50% of reserves in 5 years. By the way, for the best way to invest in gold or silver, check out the links in the description down below this video. This would mark a drop for the third quarter when the dollar made up 51% of reserves, with gold making up 15% of reserves. This is concerning, folks. This is very concerning. We're seeing inflation here in the United States without the dollar really being at risk in terms of losing its global reserve status. The game changes drastically if the dollar really just kind of falls back out of and loses that global reserve status position. So there's a lot of theories on what could happen if this takes place, and it looks like this may actually take place. Quote, the rationale to increase gold holdings, quote, the rationale to increase gold holdings therefore comes as no surprise since interest rate levels, Fed Chair Jerome Powell, the Federal Reserve, inflation concerns, and geopolitical risks continue to be leading factors in central bankers' reserve management decisions as they were last year. This comes according to the WGC. So central banks have been basically buying gold very aggressively, especially after Russia's invasion of the Ukraine last year, which had triggered sanctions on Moscow that froze its foreign currency holdings. And, we talked about this last year when these sanctions were placed on Russia. And it's really wild to see how the Biden administration decided to implement these sanctions against Russia. And the only real people who have been punished as a result of these sanctions has been the American people, me and you, and the US dollar. Because once these sanctions were placed on Russia, and basically Russian US dollar funds were essentially frozen, they were locked out of the SWIFT banking system. This gave a red alert to every nation in the world across the globe. They realized the vulnerability that they sat in as the United States ultimately ended up using the US dollar as a weapon. When you try to shut an economy down, when you try to shut a country down by limiting the use of your currency, and this is the currency that is supposed to be a global reserve currency, that creates a significant problem, which would never happen with precious metals such as gold. Gold is not a currency owned by a single country. So there would be no way to shut it down or limit its use. So these lists of sanctions have really harmed the American people. And we were told to be patient. Hey, give it time for these sanctions to take effect. And, we've given it a year and a half. We're coming up on 2 years. And I'm not personally. In fact, it further weakened the US dollar after exposing the vulnerability to all other countries who are, relying on US currency for transacting and so forth. But it made them realize, hey, this is a problem. And so this is why we've been seeing this acceleration of the de-dollarization and the collective accelerated efforts of the BRICS nations to come up with their own currency. This has not been a good thing for the United States. Now, is this all a part of the plan? Was the plan from the beginning to collapse the US dollar internally? That remains to be seen. Now, this has led to more countries trying to reduce the vulnerability of the dollar in their own economies, with gold emerging as a top alternative. The trend has continued this year as the first quarter saw central bank gold purchases shoot up by 176% from a year ago. This is real stuff. This is real stuff, folks. So, I'm a big fan of asset allocation. Ray Dalio, billionaire investor, hedge fund owner by the name of Ray Dalio. I think he manages a company by the name of Bridgewater Capital. He once said it several times, cash is trash. And I'm really starting to understand more and more of what he meant by that. But, one thing that cannot be argued is the utility of certain assets. So while fiat currency is really just paper, assets that have utility, food, tools, real estate, cars, fuel, businesses. These are assets that have utility. Somehow along the way, we've gotten disconnected and we were convinced that the paper was valuable, but the paper was never valuable. The paper fiat currency is no more than a medium of exchange. And I think that the sooner that you detach yourself from thinking that this paper is so valuable, the better off you'll be, So that's just my 2 cents on that. Yeah. So for instance, these banks led expectations for a dollar reserve decline, whereas many advanced economies forecast the greenback's levels to remain unchanged. So some countries think that the US dollar is going to remain in position. Other countries are saying, hey, it's the dollar's days are limited. Now, for the first time in 23 years, the S&P 500 is displaying a very ominous signal to Wall Street. Now, regardless of how long you've been investing, the pace of the change on Wall Street is something to marvel at. In 2021, the ageless Dow Jones Industrial Benchmark S&P 500 Index and fast growth NASDAQ Composite were regularly notching off new all-time highs. Now, and anyone who was paying attention to the stock market just realized, hey, this thing is exploding. And to some extent, it was an asset bubble. Just 1 year later, in 2022, all three indexes were mirrored in a bear market and delivering their worst full year returns since the global financial crisis. We're talking about 2008 when Lehman Brothers collapsed, AIG was collapsing. This year, Bear Stearns, don't forget about Bear Stearns, they collapsed as well. And that was a huge multiple billion-dollar company with like trillions of dollars in under management. This year, the script was flipped once more. Though the Dow Jones, which outperformed the two other major stock indices in 2022, is effectively flat on a year-to-year basis. Through May 29, the S&P 500 and NASDAQ Composite have surged 9.5% and 24% respectively. So basically, while we had a tremendous pullback in the stock market for 2022, the S&P 500 and the NASDAQ came roaring back in 2023. So for months, we looked at the broader assessment of the stock market indicators, financial metrics, and valuation tools to offer insight as to where stocks might head. Even though there is no such thing as a foolproof indicator, history has a way of repeating itself on Wall Street, and these indicators and metrics have the potential to give investors who follow them a leg up. Now, with the S&P 500 hitting a 9-month high this past week, it would appear the worst of the 2022 bear market is over. Now, I can only hope, because 401ks, IRAs, investment accounts, they have definitely taken a significant hit as a result of the bear market we felt for the last, basically all of 2022. As a matter of fact, ever since the Ukraine-Russia war started. Now, during a true bull market, we typically see a wide assortment of stocks take part in upside. And this is what I'm talking about, guys. Getting prepared, keeping some powder in the chamber, keeping some powder ready. Because when this stock market comes roaring back, you don't want the train to leave the station without you. And so ultimately, this means large cap, mid cap, and small cap stocks from most sectors and industries are going to be rallying. And for those who are not familiar with the term rallying, that just means that stock prices are going to be going up. But as you can see in the tweet below from Michael Cantrell, the chief marketing strategist over at Piper Sandler, the S&P 500 seems to have a clear breadth problem. So based on recent data, approximately 20% of the S&P 500's components are beating the index on a trailing 3-month basis. Now, the last time that such a small percentage of S&P 500 stocks were outperforming the broad-based index was March of 2000. Now, I wonder how many of you guys remember what happened back in March of 2000 or the year 2000. Not coincidentally, the S&P 500's closing high prior to the dot-com bubble bursting was set on March 24th, 2000. So basically, they're trying to draw the comparison between now and the dot-com bubble burst that we saw back in 2000 and 2001. Now, since the S&P 500 is a market cap weighted index, bigger businesses are going to have more influence. So the 9 largest companies on the S&P 500, including companies with Multiple stock classes are Apple, ticker symbol AAPL. You got Microsoft, ticker symbol MSFT. You got Amazon, ticker symbol AMZN. Nvidia, ticker symbol NVDA. Alphabet Class A shares, ticker symbol GOOGL. Alphabet Class C shares, Goog, or ticker symbol GOOG. Then you got Berkshire Hathaway, Meta Platforms, and Tesla. Now, collectively, 28.66% of the point movements in the S&P 500 are being determined by just 8 brand name businesses. Keeping in mind that the S&P 500 is up 9.5% this year to date. So, in other words, the S&P 500 is a collective of 500 of the largest companies in the United States. However, 28% of the point movements in the S&P 500 have been determined by only 8 of these businesses. So this is an overwhelmingly concentrated amount of value or power consolidated into the 8 companies that I just listed to you guys. So the simple fact of the matter is that these companies can potentially put the stock market at risk just because of how much weight they hold within the indice. Now, what do we do going forward? How do we take this information and protect ourselves, protect our families, protect our wealth, and allow ourselves to continue to move forward toward financial freedom? Well, everyone's going to have their own strategy. But number one, I would always recommend having an emergency fund. I read something recently that the average person doesn't even have an extra $400 to cover an emergency expense of $400. So the first thing I would do is definitely make sure I had at least $1,000 emergency fund, and then start working toward building a 3 to 6 month emergency fund. And at some point in the future, build that emergency fund out to be able to sustain myself for 1 year. I would like to have an emergency fund that will cover all of my living expenses for 1 year. That way I would feel comfortable. That would protect us against job loss or, any type of interruption in our income, a spike in inflation, yada, yada, yada. Number 2, I would continue dollar cost averaging into my favorite companies through ETFs, through index funds. And if you feel really, really confident after doing a lot of homework and research on your own, you could consider purchasing individual stocks. You can leverage platforms like M1 Finance, Fidelity, Moomoo, Webull, Charles Schwab, Vanguard, you name it. The third thing I would do, and I would, depending upon my financial situation, I would certainly be looking to invest in myself. By investing in myself, I'm talking about taking courses to increase my skill set so that I have higher value skills so that I can increase my income, because don't let anyone lie to you. Your income will always be your greatest wealth building tool. So the bigger your income, the better off you're going to be in terms of getting out of debt and in terms of building wealth. And in addition to that, getting out of debt frees up your income to be able to build wealth. So I would be investing in myself, and I'd be willing to invest in businesses that I could personally start and run. These could be home-based businesses, side hustles that, ultimately could grow into becoming full-fledged businesses. So these are the strategies that I will be taking, that I am taking to prepare myself and my family for the days, weeks, and months to come. But anyway, guys, I just wanted to share this information with you guys. If you guys got some value out of this video, definitely consider subscribing to this channel, and definitely drop a like for this video and share this video with everyone you know. I really appreciate you guys hanging out, and I'm gonna catch you guys on the next one.